Good afternoon. We're getting right down to business here, doing it live, doing more at 4 weekday afternoons. Stay with us here in the 4 o'clock hour, and then stay tuned at 6 this evening for the Just Help One radio show and podcast presented by the Union Rescue Mission. I'll be on the air again at 6 o'clock this evening, and every Thursday evening at 6 with Mark Hood, the CEO of the Union Rescue Mission. Tonight we'll be talking more about the Just Help One concert coming up on May 14th at the Peacock Theater, benefiting the Union Rescue Mission. You get more information about that at justhelpone.org/concert. Right now, it's Mottek On Money live on the air on 790 KBC, streaming live online worldwide at kbc.com, and your on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all of your favorite podcast platforms. Stocks rallying again today with the S&P 500 moving out of correction territory after stocks made it 3 winning sessions in a row. Looks like a burst of optimism today around the latest earnings news, helping to perk up the mood a bit. Also a potential walk back on tariffs by President Trump, and hopes for the Fed to cut interest rates in the coming months also help to give stocks a lift. The Dow coming in for a closing gain today of nearly 500 points. The S&P 500 moved up 109, and the NASDAQ gained 458 points. The yield in the 10-year note now at 4.32%. The Los Angeles County Economic Development Corporation and the Southern California Leadership Council have just released a new trade and logistics report highlighting the potential impact of tariffs on the Southern California economy, the impact on the ports of L.A. and Long Beach already being impacted. I'll discuss the latest on that later this hour with Stephen CHEUNG, the president and CEO of the Los Angeles County Economic Development Corporation and World Trade Center Los Angeles. Nervous times continuing in the car business, meanwhile, with tariffs front and center. I'll discuss that part of the story later this hour with our go-to car expert, Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Keeping an eye on the price of gold as well as cryptos today, holding up pretty well. And let's get the latest here now on your money, the markets, the economy, tariffs, crypto, gold, and the whole works. Joining us live is John NAJARIAN. Dr. J, as he's known in the major financial networks, co-founder of Market Rebellion, author of numerous books, including It's Not an Option with his brother Pete NAJARIAN. Also, he's got the laser eyes on, too, following the cryptos closely and big at the business conferences worldwide. John NAJARIAN, thank you very much for taking the call here this afternoon.
Always a pleasure, Frank. This is a pretty special 3-day rally that we're seeing here after a pretty rough Monday. The last 3 days have been, I think, more to the market's liking.
That is good to see. And tell us about the significance of that. Have we bottomed out here? What's your view of things here at the moment?
Well, Tom Lee, a friend of mine from Fundstrat, has always thought that when we see the spikes in volatility, as we did see pretty robustly in the past couple weeks, volatility spiked from 15 to 60, pulled back into the 30s, but couldn't really hold under 30. And Tom thought that that is something that we need to see. Well, now we've seen it. We're significantly below 30. The markets in general seem to be a little calmer because of exactly what you talked about with the president. If he's not fighting the whole world at one time, I think we've got a real shot at seeing some comebacks. And I'll throw you this one, Frank. Google or Alphabet was $158 a share before the tariff, Tariff Freedom Day, or I forget what he called it, Tariff Independence Day. Anyway,
Liberation.
It's now Tariff Liberation. Thank you, sir. Now we're a good $10 higher than where it was on Tariff Liberation Day. And there are a number of other stocks that are moving up higher than they were after the depth of that fear, which more or less was at a zenith right around the 10th of March. But it's certainly better to see a recovery and to see the president's rhetoric toned down a little bit, even if we believe that we should get some of these jobs back in America. The way to do it probably isn't to go after every country on earth at the same time. And now there's less rhetoric about that and more just deal doing, deal cutting, and I think that's a much more positive outcome.
And it looks like the Fed chair will not be fired, according to the president. That also seems to have calmed nerves as well, along with the tariff latest signals primarily from the Treasury Secretary, who seems to be serving as a calming influence in the financial markets, Treasury Secretary Bessent. So we did see a pretty rapid exit from correction territory for the broadly based S&P 500 as of today. Google, you mentioned Google. Google's parent company Alphabet, the stock did pop on earnings today, better than expected earnings, and they're hiking their dividend and a $70 billion stock buyback there. What about Google here?
Yeah, the numbers that Google put out were certainly excellent, to say the least. And obviously, they are not an exporter or an importer. So their access to China has been significantly curtailed, but that's a decades-old problem, not a new one for them. And they put up numbers, again, on the ad side, which people don't advertise if they really don't have a little bit of confidence in the markets coming back. They instead would hunker down, but that's not the case. Their worldwide income, and I'm not immune to the idea that Google more and more is a cloud play, not just an ad play for the searches they do or the YouTube channel that they own. I think overall what we're seeing right now is that there are companies like Texas Instruments today that they had earnings over the previous day, over the previous night, but Texas Instruments had a nice rally, and that's, of course, in the semiconductor space, and they've done exceedingly well in even raising some pretty significant guidance numbers rather than just backing away from it like some have done. But quite frankly, no pun intended, Frank, but quite frankly, even American Airlines, which withdrew guidance based on the uncertainty of what travel would look like for them, mainly being a U.S. carrier that has pretty significant international travel as well, they rose today after they withdrew the guidance. So I think, as usual, the markets are getting more and more used to some of the ups and downs that we're facing.
And since you're a big options guy, of course, you wrote the book, It's Not an Option, with your brother, Pete NAJARIAN. Please say hello to the family for us here as well. Certainly a lot of fast money these days. And what about on the options front with the volatility index all over the place? And give us your thoughts about some of the fast money out there.
Well, right now I'd say a lot of folks are reassessing their positions as far as for several weeks, perhaps 4 to 6 weeks. Big institutions, a lot of the hedge funds and so forth, were really only looking for short setups. In other words, stocks where they thought they could feast on a very quick downward movement or momentum even in some of the tech stocks like the Mag 7. You've covered that ad nauseum, really, and rightfully so, because that's exactly what was happening. Now, there's less and less of that and more of people bottom fishing. And as you and I have talked about in the past, I believe sooner or later we're going to hear that the Oracle of Omaha or other notable investors will have said, yeah, I used that significant dip in the market to get back in because that's what I do. I think more and more we're going to hear stories like that. I'm not saying that that's happened yet, but I believe it's just literally days away from somebody saying, yeah, on that 20% pullback or on that 10% pullback, I added to positions in this, that, or the other. And that will be also a significant catalyst for higher movement over the next quarter.
All right, the other big story this week, Tesla and Elon Musk on that earnings call, saying he's going to be spending more time with Tesla and less time in government. We have seen Tesla rally for the past couple of days now, up another nearly $9 today at $259 and change. What about Tesla here?
Well, the idea that Tesla gives us a pretty accurate, transparent look into their monthly sales, production numbers, as well as sales, deliveries, if you will. Those numbers were down over the past several quarters and over the past year. However, the fact that Mr. Musk said he would be spending more time at Tesla and less time at Doge over the coming months was certainly what the markets wanted to hear. And as they reacted to that, the stock went from a close of about $237 a share to, like you say, about $22 higher than that over the last two sessions. I would think that any stabilization in that stock will result in people putting more money back into Tesla. They also said that they would, the Optimus robots or autonomous robots that they have, as well as the Model Y, which needs to meet first half of 2025 production numbers in the near future. That was not, again, something that they pushed off. They instead said, yep, we're sticking to that number. We're going to bring out the Model Y in the first half of the year. And you and I know, Frank, that means they have to bring it out by June. So we're not that far away from that. And I think the market overall reacted very positively to the idea that we would be getting that from Tesla.
On the air live with John NAJARIAN. Dr. J, as he's known on the major financial networks and co-founder of Market Rebellion. His book is It's Not an Option. He does a podcast too, The Rebel's Edge, by the way, which is terrific. And by the way, if you want to see what John NAJARIAN and I look like, go to my Twitter feed or X feed today at Frank Mottek. And I think you retweeted it. The great picture of you and yours truly here at a recent event. And John NAJARIAN, hopefully we'll get to see you out here again soon. But before I let you off the hook, let's get to some of even the more exciting stuff. Gold and its record run-up and recent pullback, and now hovering at around 3,300 or so. And then, of course, Bitcoin also having a good week now at around 94,000. Your thoughts on what's happening with the crypto and good old analog gold here?
Well, first of all, thank you for mentioning that picture. It reminds me that I will be out in L.A., and I would love it if we could grab a drink or dinner, Frank, because I'll be out there for Milken and for the Uncorrelated conference that's going on out in L.A. the 5th through the 7th. So I look forward to both of those and perhaps having you drop by and us getting another picture together. But gold, let's talk about that for a sec. The precious metal has continued to set records. Gold miners were really reacting to that over the past, I'd say the prior 20 sessions in a row, but now they've finally pulled back a little bit. I still think that is an opportunity. I'm not saying the pullback in the miners. Again, there's gold miners like Freeport and Newmont and Anglo Gold Ashanti and so forth. AU is the symbol there. There's a lot of gold miners that were up 50, 60, 70% in the first 4 months of this year. That's pretty extraordinary. I don't expect that to continue, but I do expect that gold itself will continue to be an asset class that people seek, just as you mentioned moments ago, crypto, Bitcoin in particular. And Bitcoin was 93,000 and change just after the market closed today. I'm pretty sure it's close to that number now. And I would think that we could see another run at 100,000 in the next several weeks.
That is fantastic. And by the way, I'll be broadcasting live from the Milken Institute Global Conference that whole week. So you're going to be seeing me there, and hopefully we'll be on the air together from that magnificent venue, the so-called Davos of Beverly Hills, the Milken Institute Global Conference. And by the way, about 60,000 people have now seen that picture on X today, on that X feed. So
well,
that's
I'm
big.
flattered, and they should appreciate the great work that you do for them on the financial markets every night, Frank. And I'll be there at the Worth booth, at the Worth magazine booth. So you and I will be on Media Row. We'll have to make sure we secure some dinner plans.
Yes, most definitely, and appreciate that very, very much. And before I let you off the hook here, John NAJARIAN, I got to surprise you with one last question here. Any specific places where you are putting money now and or taking it off the table?
We are continuing to see a lot of money flowing into the TLT. Again, when that rallies, that means interest rates lower. So obviously bonds and that particular ETF for bonds move in the opposite directions. So I do think that although the president took the pressure off the Treasury Secretary or not just Treasury Secretary, I'm sorry, the Federal Open Markets Committee chair, which is, of course, Jerome Powell, I think he still wants to see lower interest rates. I will be surprised if in the June timeframe we don't see our first cut. We're not going to see it in the next 13 days, which is how far we are ahead of the May meeting for the Fed. But I think by the next meeting in June, we will see our first cut of the year. And that would be welcomed by home builders, by construction companies, and so forth.
It's part sports.
We have football on the brain.
Part pop culture.
Dennis Leary. True or false? You refuse to wear a glove with Mickey Mantle's signature on it for the movie The Sandlot.
The Red Sox blood, the Bruins blood, they run deep.
Add in the best celebrity interviews.
Robert De Niro here on The Rich Eisen Show. How are you, sir?
Just got over a 24-hour virus.
The antidote is to appear on The Rich Eisen Show.
There you go. I would have just done it earlier.
And you've got The Rich Eisen Show podcast.
There is a medicinal quality to appearing on this program.
Follow and listen on your favorite platform.
And I think that is a very positive sign for the economy as well.
Fantastic, John. Thank you very much for taking the call. Another super busy day for you, and appreciate it very, very much. That is investment expert John NAJARIAN, Dr. J, as he's known, on the major financial networks and at all the big business conferences, including the upcoming Milken Institute Global Conference in Beverly Hills, co-founder of Market Rebellion, author of numerous books, including It's Not an Option, also on the podcast Rebel's Edge. John, looking forward to seeing you here soon. Thank you very much for joining us live here today. Out to the freeways now on 790 KBC. Frank Mottek here. Want to take a moment to talk about owing taxes and my trusted friends, Ultimate Tax Group. If you owe back taxes or have unfiled returns, the IRS offers Fresh Start programs. Now seize this rare chance now and call Ultimate Tax Group at 888-711-4850 and see why they are different than other firms. They will actually call the IRS with you on the phone to gather your current account information, but also will go above and beyond and request the IRS to grant you immediate protection from collections actions like bank levies and wage garnishments. Other companies charge $500 to $1,000 for that service, but Ultimate Tax Group won't. A-plus rated 5-star service with direct access to ownership and upper management while they work on your case. Just tell them Mottek sent you. Call Ultimate Tax Group now. They're the best. 888-711-4850. Again, that's 888-711-4850. They care and fight for their clients. 790 KBC welcomes Herb Alpert and the Tijuana Brass coming to the Dolby Theater in Hollywood November 15th. Tickets are on sale on Friday at Ticketmaster.com. That's tomorrow. Right now, caller 9 wins at 1-888-790-5222. You can get a pair of tickets to the show if you are caller number 9. Call right now, 1-888-790-5222. The tickets furnished by Live Nation. We have a winner on Wall Street, third winning day in a row here with the Dow up nearly 500 points at the bell at 40,093 up. The Dow back above 40K today. The S&P 500 up 109 at 5,485, and the NASDAQ up 458 at 17,166. The S&P 500 exiting correction territory today. Bitcoin hovering at around 93,500. Ethereum at 1,764. And Doge is back up to 18 cents. Price of gold higher right now of 29 cents at 33.77 an ounce. It popped above 3,500 earlier this week, and then that one-day blowout now hovering just below 3,400 an ounce. Silver just below $34 an ounce. Tesla moving higher again today following its earnings news, and plans by Elon Musk announced this week that he plans to spend more time at Tesla and less time in the federal government. Tesla stock up $8.77 at the close today at $259.51. Shares of United Health pulling back again today, down nearly $4 at $424 and change. Apple up nearly $4, participating in the rally at $208.37 a share. And NVIDIA, the magnificent one, getting a little bit more magnificent today, up nearly $4 at $106.43. And now the latest news for you here on 790 KABC. Mottek On Money continues here, 790 KABC. Tariffs and uncertainty, words heard a lot in business circles these days. Companies cutting their forecasts, projecting the tariffs will weigh on their profits and put more pressure on an already pressured consumer. At least a dozen companies, according to CNBC, have now cut or pulled their full-year outlook so far this earnings season, with several more weeks of quarterly reports still expected. For many companies, tariffs mean higher prices on commodities. You name it, the cautious projections coming in the middle of a 90-day pause of the higher rates under President Trump's reciprocal tariff plan. And we're watching how all this plays out until early July. Most imports will face a duty of 10%, excluding goods from China, which are subjected to 145% duties, along with aluminum, cars, and other non-exempt items. Still, the situation is changing, seems constantly. The Treasury Secretary Scott Bessent this week told investors in a closed-door meeting, reportedly, that he expects that there will be a de-escalation in the president's trade war with China in the very near future, with the White House also saying that automakers could win exemptions from some tariffs. Meanwhile, the Los Angeles County Economic Development Corporation, the LAEDC, and the Southern California Leadership Council have just released a new trade and logistics report highlighting the potential impact of tariffs on the Southern California economy, including the impact on the ports. All this as Los Angeles continues to recover from the horrific firestorms which tore through the Pacific Palisades and Altadena in the San Gabriel Valley. Joining us live now is Stephen CHEUNG, the president and CEO of the LAEDC and World Trade Center Los Angeles. Nervous times continuing here on what's happening with tariffs and trade. And Stephen CHEUNG, you and your team have taken a close look at all of this very, very carefully. Thank you so much for taking the call here this afternoon and sharing the results of this important study.
Good to be back, Frank.
Great to have you with us. And tell us about the impacts that you're seeing here in Southern California based on what's on the table right now.
Yeah, I think we all know the importance of the Port of Los Angeles, Port of Long Beach, their contribution to the local economy. This report that we just released with the Southern California Leadership Council really focuses on the actual numbers. So from our numbers, what we looked at is not just the Port of LA, Port of Long Beach, but the entire trade and logistics sector. And what we found is that the industry combined together contribute nearly $500 billion, $497.6 billion in total economic output. And they support directly about 900,000 workers in the five-county region in Los Angeles area. So combined together, including the induced and indirect jobs, we're now talking about 2 million jobs are dependent on this one single sector. And additionally, what we found is the average annual wage in the sector was about $90,000. This is about 26% higher than all the other jobs combined together when it comes to the average wage, which is about $71,000. So it's a good paying sector. So the risk is that if there's going to be any escalation of this trade war, and especially China being our number one trading partner for the Los Angeles Customs District, this could potentially really impact the ability for this region to maintain a competitive industry in the trade and logistics sector.
Is there, in fact, a de facto trade embargo in place right now, given what's happening, everything frozen at the moment? Are there already backups or inertia on both sides of the Pacific?
Yeah, I think it's been tracked that there are multiple sailings that's been canceled and been on hold. And once that happens, it becomes a cyclical effect that you're going to see less volume coming through until you can basically see the escalation between the two nations. So hopefully, as the Trump administration has been talking about, there could be a de-escalation. If that does happen, it could potentially bring us back on track. But right now, the trend is that we're seeing cancellation of sailings from China to the U.S. with the goods because right now the orders are being on the hold. So there's not enough volume for a lot of these ships to be able to come here. And when we have less ships, you have less cargo coming through, you have less workers that are going to be working the docks. And then later on, there's going to be an entire multiplier effect of not as many truckers, not as many warehouse and distribution centers working. So this is going to have a wave of effects throughout this entire region and throughout the United States.
And what's the expectation on inflation and all this? Anecdotally, we've been hearing some companies are not putting out the catalogs and not pricing their items, already thinking about the holiday season and so forth, and a lot of uncertainty here as to how to price these things, and everything from packaging to the most delicate, most expensive items potentially affected by this. Among the movers and shakers you talk to, what is the inflation expectation in all this?
Yeah, it's such a difficult situation for our businesses to handle right now because a lot of them were already anticipating tariffs to be increased, not only with China, but with many other countries. Then overnight, all of a sudden you start seeing a delay in the implementation of these tariffs, not knowing whether there's going to be additional negotiation that can eventually eliminate these tariffs. So in anticipation of the increase in prices, a lot of these retailers and companies are thinking about they have to pass on this tax, this increase to the consumers. But then there's a pause. So if you start introducing the increase in price without actually seeing the tariffs come through, then the consumer is going to look at you like you're ripping them off. So this is now creating some trust issue in terms of how quickly do you move forward with the increase in price. So that's why it's so difficult for a lot of the companies to really figure out how do you adjust the price accordingly. And many of them are actually holding until they can get more information. But at the same time, you can't just basically hold on the packaging. You can't hold on basically selling. So it's creating chaos for a lot of companies.
And this at a critical time in the recovery effort here in Southern California with a massive rebuilding effort just getting started once the debris is removed in the Palisades in Altadena. And I know you've been at the forefront of that effort as well. Can you give us an update on what's happening on that front and how this trade and tariff situation is impacting all that?
Yeah, previously when you and I spoke a couple of weeks ago, we were talking about that there are 16,244 structures that's been destroyed by the two fires. And the businesses that have been impacted, it ranges in the thousands, right? The ones that are directly impacted in Palisades or in Altadena. And of course, the surrounding regions are also impacted. So as they're looking at recovery, as they're looking at rebuilding, they're going to need their supplies. They're going to need their products. And so any disruption to the supply chain becomes very, very challenging. Additionally, what you're seeing is some folks are thinking about stockpiling some of their goods and their products before the tariffs actually hit. But right now, it's also increasing the capacity issue when it comes to warehouse and distribution center. If you bring in the goods too soon, then basically you have to pay extra to basically store these products. And then later on, if you can't sell the products, it becomes a huge issue here as well. So combined together, it's actually creating additional congestion and additional supply chain issues that cannot be easily resolved because they don't know what's going to happen next and what the pricing is going to look like. So this is going to have an impact whether we resolve the trade talk or not immediately. There's going to be long-term consequences to some of these discussions that's been happening on the national and international level.
Right, and certainly a lot of big conferences dedicated to the recovery and rebuilding effort here. We had Kevin Harbour on this program recently, the president of the BizFed Institute. They have a big event next week, and you have a big event coming up as well, I believe, on May 8th, is it? The 10th anniversary Select LA Investment Summit. Tell us more about that one.
That's correct. So we've been doing this event, Select LA Investment Summit, as a spin-off from Select USA Investment Summit, where traditionally you have thousands of investors from around the world coming to Washington, D.C. For that conference. And what we did is basically we did a spin-off event right before the Select USA conference, so our international investors can come to Los Angeles to see everything that's here in this entire region before going to D.C. and seeing all the other options that are there.
NBA veteran Jim Jackson takes you on the court.
You get a chance to dig into my 14-year career in the NBA and also get the input from the people that will be joining. Charles Barkley.
I'm excited to be on your podcast, man. It's an honor.
Spike Lee, entrepreneur, filmmaker, Academy Award winner.
Knicks fans.
So, now you see, I got you. But also how sports brings life, passion, music, all of this together.
The Jim Jackson Show, part of the Rich Eisen Podcast Network. Follow and listen on your favorite platform.
So this is our 10th year. It's going to be a great event. At the same time, we are a bit challenged because a lot of the investors are not sure whether they should be here or not. So some of them are going to be here just to basically make sure they're able to build that relationship. But at the same time, we're also wondering whether some of those visitors might actually get stuck because they might not be able to get the visas that they need in order for them to come over here. So it's a two-edged sword, and we're figuring this out, but we're anticipating a very good participation conference. We have Lieutenant Governor Kolonakas as our keynote speaker. We also have Mayor Bass and a number of different companies that will be speaking, including the Port of Los Angeles, including a lot of our great partners in this region to showcase how amazing Los Angeles still is for international investors.
Of course, you had your recent LAEDC Economic Forecast event. Given all these most recent developments and the aftermath of the fires and now tariffs and trade, have any adjustments been made at this point to the economic outlook here for Los Angeles?
No, not yet. I think we're still keeping with the numbers because we've already anticipated some of the fluctuation in our economic forecast numbers. So I think we're still pretty consistent with our projection. What we're looking at is what are the opportunities in the future, and again, identifying the industries that will continue to grow. What we're hoping to see is, for example, we've identified the sports and entertainment sector as a key market for us in the future, given that, again, with the FIFA World Cup, with the Olympic and Paralympic Games, as well as now having 11 professional sports teams located in this entire region, LA will be the entertainment and sports capital of the United States for the next 2 decades. So this is going to drive a lot of folks coming over here, making sure that we're able to work with our Japanese partners to continue to bring in the Otani effect. But at the same time, how do we bring the investors besides just tourism? How about the technologies that will be coming over here because they want to be part of this entire ecosystem? How about cybersecurity? Facial recognition technology that can basically help our entire sports and entertainment sector. So those are the opportunities that we see that are going to be fantastic for this region. So there are challenges, but there are also a lot of great opportunities ahead.
Certainly. You've got a lot on your plate. Anything else you'd like to mention, Stephen Cheung, top of mind here, given all that's going on here minute by minute?
Well, I say that as we're going through some of these international uncertainties, I think the way that we can actually protect ourselves in Los Angeles is to encourage Angelenos and folks living in the Los Angeles region to actually spend locally, support your local businesses, because this is what's going to help us drive economic and conditions to improve that condition to basically help support our local businesses. So we hope that Angelenos will continue to support your local businesses, and as we're moving forward, also work with us nonprofits like LADC, and then come to our Select LA Investment Summit and meet your international investors and partners during this turbulent time, because the best way to ensure that you have a future for yourself is to make sure you have those right connections during this challenging time. So when things are improving a little bit, you already have those contacts in place.
All right. Well, certainly count on our support here, Stephen. Thank you very much for taking the call live with us here. That is Stephen Cheung, the president and CEO of the Los Angeles County Economic Development Corporation, the LAEDC, also the World Trade Center, Los Angeles. Stephen Cheung, thank you very much for joining us live this afternoon.
Thanks so much for having me.
And right out to the freeways we go now on 790 KABC. Frank Mottek here. I want to take a moment to talk about owing taxes and my trusted friends Ultimate Tax Group. If you owe back taxes or have unfiled returns, the IRS offers free Fresh Start program. Seize this rare chance now and call Ultimate Tax Group at 888-711-4850 and see why they are different than other firms. They'll actually call the IRS with you on the phone to gather your current account information, but will also go above and beyond and request the IRS to grant you immediate protection from collections actions like bank levies and wage garnishments. Other companies charge $500 to $1,000 for that service, but Ultimate Tax Group won't. A-plus rated 5-star service with direct access to ownership and upper management while they work on your case. Just tell them Mottek sent you. Call Ultimate Tax Group now. They are the best. 888-711-4850. Again, that's 888-711-4850. They care and fight for their clients. Mottek On Money continues here in 790 KABC. Let's get it into gear here now and talk about the car business with tariffs still front and center. Nervous time in the car business based on the back and forth on tariffs. Looks like some lawmakers in Washington making themselves useful, trying to make sure that you can hear the station in your car. An AM radio bill has been reintroduced. Let's bring in Lauren Fix now, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Lauren, good afternoon to you.
Good afternoon. Yes, finally, it looks like we're going to get the update for the AM radio bill. It's going to be voted on, and this is important because we want to be able to hear you, friends. We want to be able to hear all the great content that's on KABC. Yes, me too. Yeah, so this is big. So it was supposed to pass. Senator Ted Cruz of Texas brought it up, and it was ready to be voted on, and it never made it to the floor. And that's a problem. So if you remember the old Schoolhouse Rock, we know how this goes. You have to, get the bill, get it on the register, get it on the floor, then they can vote on it, then it becomes a law. And so it looks like this time it's going to pass. A lot of car makers were kind of pushing against it. They were removing AM radio, and I still get cars to review today that don't have AM radio in them. And when I do the review, I make sure to state that this is a problem. But it looks like today we're going to get this passed. FCC Chairman Brandon Carr put the bill up over to Senator Ted Cruz. He says, we want this mandated, we want this in, which is good. And car makers are starting to hear this. Not all of them, like I get some BMWs, the Teslas that don't have them in there, like I said, but it looks like this is going to happen. And you may think, well, it's just to listen to conservative talk. But the truth is, it's about sports. Local sports is not necessarily on television. Sometimes you can't get it or you're a cord cutter, but you can listen to all your local high school and college sports. Plus, I have a friend who's Cuban. She loves her soap operas. She cannot get them anywhere but on AM radio. Or maybe it's weather. When you had fires in the LA area, you need to know what's going on. And if there's no internet and you can't use your phone, the AM radio is your go-to source.
Well, you're preaching to the choir here. Nothing beats radio for breaking news. When news breaks, you can hear it immediately on this station, and radio, for that matter, is playing a very, very important role, certainly in emergency situations and even in the most extreme situations, having been on the air during hurricanes, firestorms. I was on the air when the space shuttle exploded, and people heard it instantly based on the descriptions that we had. So there are many examples of how nothing beats radio, and that's why I say on this program, see it tonight, read about it tomorrow, but hear it now. Nothing beats radio for breaking news, certainly, and that's how it is. Now, regarding the AM radios, I guess has technology finally advanced so that electric cars can have AM radios? I guess Tesla does not have AM radio, right? Because supposedly it interferes with the AM signal somehow.
Well, before we get to that, I want to let you know this is bipartisan push. Even Senator Edward Markey, a Democrat of Massachusetts, is pushing for this. So it's good both sides of the fence are understanding this and liking the fact that AM radio is super important. And by the way, emergency signals go through AM radio because they're bouncing signals, where FM is a linear signal. So if you listen to FM, you could easily, go around a corner and not hear it. And if you're listening on an app on your phone, the biggest problem is if you don't have 2 bars of service, you can't hear it. And if you listen to podcasts like I do, you have to wait to either have Wi-Fi or until the signal's stronger. So these are huge factors to keep in mind. As far as getting this through, I think it's going to pass this time. I think we're really going to be in good shape, which is excellent news. On
the air live with car expert Lauren Fix on the tariffs. Lauren, this back and forth, and now some signals from Washington that there might be some exceptions here for the car makers, the domestic car makers. Give us an update on how this is all impacting the car business.
Well, I'm watching this, and the mainstream media has lost their mind. They're having experts, I don't know who the heck they are, because they're not really experts. They're financial people or politicians saying that the price of cars are going to go up by 25%. That's not going to happen. As a matter of fact, tomorrow morning, it'll be tomorrow evening, your time, like around 3 in the afternoon, I'll be posting another interesting story that has a lot to do with what's going on with not just the tariffs, but also the electric vehicle mandate potentially going away. So this is huge news. And I think what you need to watch is, one, cars might go up between $3,000 and $6,000. There are tons of incentives right now with over 3 million cars available to people. So if you're thinking you want a new car, there are 3 million cars today on the ground in California and other states that do not have a tariff on them. So any dealer that says, oh, there's a line here for a tariff price, you don't want to buy from that dealer. That's bad business. That is not the way to do business with you. You want an honest dealer, and if you don't get them locally, which is always best.
Absolutely, Lauren. Thank you very much for joining us live. Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast, live with us here on Mottek On Money on 790 KABC. Stay tuned now for the 790 KABC News Blitz with Randy Wang, and stay with us at 6 o'clock. I'll be back on with the Just Help One radio show and podcast presented by the Union Rescue Mission, along with the CEO of the Union Rescue Mission, Mark Hood, the Just Help One campaign and the Just Help One concert coming up. Stay tuned at 6 for the Just Help One show here on 790 KABC.
The Sean Ryan Show presents Peak Points. Get timeless inspiration from the very best of the Sean Ryan Show.
September 11th happens. What is the first thing that went through your head? September 12th, I'm going back in the military.
Talk about being recruited by the cartel. How do you cope?
Just learning how to find a new normal.
One of the most tragic events in American firefighter history.
You know what comes after.
You have this beautiful life. You have these horrible experiences, yes, but you can do something with them for the greater good.
The Sean Ryan Show Peak Points. Follow and listen on your favorite platform.